Hello again, you're watching CNBC's European Money Wheel. It's 13 minutes to the hour. I'm Ed Mitchell. Online financial news company, the Dialog Corporation, published their interim results today, and with me in the studio is the CEO of the company, Dan Wagner. First of all, Dan, it's good to have you with us. In fact, we've got the results here, pretty well 7 million from just over 2 million in the first half. By any standards, that's very sharp growth. Obviously, the integration of Knight Ridder is moving ahead very well. How do you account for that sort of sharp growth?
Well, primarily the business that we acquired was fairly heavy, and we took out a fair amount of costs. Part of the acquisition justification was the fact that we felt that we could run the business more efficiently. And I think we've demonstrated that with the first half. The operating profit increase is over 400% year on year.
Just before we go on, Dan, I just want to point out to our viewers the correct spelling of the company. It seems only right that we have you in the studio, and at least we have the right to D-I-A-L-O-G. Got that out there? Thanks. Obviously, in this business, content is king, isn't it?
Yes.
I'm just wondering in what way you're moving ahead on improving content, because you're not a publishing firm, are you? So I'm just wondering on the content side.
From a content standpoint, the Dialog Corporation actually has databases that represent over 50 times the content that's available in the World Wide Web. This was one of the main driving reasons why we looked to acquire the company. Over a 25-year period, the company had built up a formidable range of databases. They didn't own those databases, but they enabled those databases to be interrogated by business and professional users. And that archive of information is really unparalleled. As I said before, over 50 times the size of the internet, which in itself is an astounding statistic. But in terms of our competitive situation with other major players in the field, players like Dow Jones and Reed Elsevier, the database content of Dialog is about 5 times to 10 times the size.
Right.
So we're really offering a very formidable range of information, and much of the value that MADE brings to the party in terms of the merger of the two businesses was the way in which we enable people to interrogate these large databases just to get the accurate results. Otherwise you get involved in this information overload issue of just getting too much results that don't necessarily meet the needs.
That is absolutely the key to the whole thing, is ease of access, is the search engines that are used, some software system that does your work for you. I know this because I'm on the receiving end of this stuff here.
Yes.
And that is the key to it. What do you offer that others don't then?
Well, primarily we have delivered and created a technology known as InfoSort that actually organizes large databases and enables it to be interrogated very quickly by novices to get very accurate results. In fact, also in the first half of this year, which we announced as part of the half-year statement, was the wide adoption of this technology by the BBC, a further endorsement, I think, of the value of this structuring technology that sort of gets rid of this information overload issue.
Yes, you've done a deal with the BBC. What's that worth?
Well, it's worth many millions of pounds over a period of 5 years, but primarily it is worth a lot more in terms of the BBC leveraging our proprietary technology InfoSort and further endorsing that as a standard for information retrieval. So we see that as another important stage in the creation of a standard for data indexing, and InfoSort, we believe, is the front runner in that area.
And obviously another key aspect of the whole thing is charging people. How do you actually get the money in?
Well, I mean, we have quite a range of pricing sort of options for customers, but we are focusing our efforts on providing flat fee or all-you-can-eat type of access to our entire archive, because we feel that information, electronic information, should be used as a utility so that any individual can interrogate issues, research projects, find out about competitors without having to be concerned about incremental charges. And as an organization as a whole, we believe that information flow within the organization is important. Companies are asking for it. We're trying to satisfy that within a sort of framework of a flat fee plan. And in the first 6 months of this year, since taking over the business, we've converted 30% of the revenue that we acquired to flat fee plans. So we think we're way ahead now of actually, getting the service used more as a utility, people feeling more comfortable in interrogating information, and obviously helping them do their business better.
And you've also been reducing your cost base, haven't you?
Quite dramatically. The cost base has been reduced by 33% of the combined business. We knew that there was a lot of cost to take out of this business before we acquired it, but we're very pleased that we were able to do it, that our assumptions were correct and that we were able to do it so quickly. So we now have a very strongly positive cash-generating business. It's profitable after the service of a mountain of debt, quite considerably so, as you mentioned before. And we're now in a very strong position to leverage our position in the internet space and in the e-commerce space. It's quite rare to have a company at the forefront of new technologies, particularly a British one, that's in the internet area and making money. So we're very proud to be involved with that company.
Yeah, what's happening in the e-commerce area?
Well, when you think about the core competencies of Dialog, it's always been about licensing a database of information and then bringing that into an aggregated file to enable customers to interrogate it alongside lots of other information databases. The move into e-commerce is actually very straightforward and simple, because what we're looking to do is to sign up retailers and have access to their product databases, which has the costs, the prices that they charge customers, and aggregate that with other retailers, similar retailers, so that as users, customers will be able to say, what is the best price for this type of printer, or I need some stationery for the office or whatever, and get comparative prices through their intranet or local network and make purchases on screen. Now, we know all about aggregating databases, so moving into e-commerce in this way is something that I think we bring a unique skill to, and something that is a natural extension of our business. But I think the real opportunity here is the fact that the e-commerce market, of which we have no share today, and we're market leader in information services, is expected to grow to $357 billion in sales value by the year 2002. So there is an opportunity to capture some of that. And my view is that the e-commerce area of our business, within 5 years' time, will dwarf the information services business, just purely because of the nature of the size of that market opportunity.
Dan, it's been good to have you with us. It'll be interesting to see what slice of that huge market Dialog gets. Thanks very much indeed.
Thank you very much indeed.
Thank you.